Good afternoon, everybody. It's Jeff Scott. This is August 21st, 2016. This is my top-down review. If only we could perform in the markets like the Team USA basketball team. I was just watching it. It's halftime. Decided to do my recording. I don't think Serbia has a chance, and I never realized how good Kevin Durant is living in the Eastern Conference, but wow. Anyways, I entitled this time today, Still Waiting, Part 2, because in reality, nothing happened last week. Yes, some went up, some went down, but for the most part, the markets seem to be about the same place as we were a week ago. Disclaimer, this for education purposes only. Anything recommended in the spirit of education should not be considered investment advice. I am a doctor, not a broker. I am independent. I am not affiliated with any software vendor or trading company. Tools I demonstrate are those that I use in my daily trading, and I have paid for all the tools I demonstrate. Trading involves risk. You and you alone are solely responsible for any investment decisions that you make. I've blended, I think, two different styles into my trading. To the left, Can Slim is brought by O'Neill, improved by Morales and Catcher, made electronic by Woodward and Brown. And then John Person, who author, trader, mentor, friend, software creator, multiple great tools that help me refine my trading, especially around actually acting on a trade, and not just finding what are good stocks fundamentally. Trading buddy George Lee, hopefully we'll be doing another trading session in Southern California later this year. Decided this year not to do any multi-day ones live in Southern Florida, rather, because I've been back to work, although we will talk about my one-day meeting before we're over. And then Van Tharp for position size and money management. I have lots of programs. What do I need to trade? I need Thinkorswim or Genesis or both. I need HGSI for analytics and EdgeRater. And then I use seasonality. My favorite these days is Seasonality Trader. They all have their merits. And then I use a number of different websites. Here's, speaking of websites, highgrowthstock.com. I pointed out because if you don't have it, it's worth checking into. But more importantly, under investment strategies, which is where my arrowhead is, you drop it down and you could see lots of videos from me and from Ron Brown. Ron is really good at teaching how to use the program. And then the other thing is that there's a free 30-day trial. Speaking of John Person, he has a 3-day meeting coming up in September on the 24th, 25th, 26th. Highly recommended. If you haven't been to one in the past, you really should consider going, even if you've been in the past. Because I brought a lot of HGSI users to John, I will hold a one-day HGSI refresher meeting on the 23rd. It's $400, including actually breakfast, lunch, and snacks. If you haven't, if you are attending John's meeting, then I give you a break, and it's only $300. Where are we? Man, we are back to living at the top of this circle where it seems like we can't decide what duration to go back into a trend, and we are in chop. And based upon the fact that we're in this chop or uncertainty, to me it's raising cash, smaller systems, smaller positions, and selling premium. But to be honest with you, I am vacillating back and forth because the markets keeps giving me mixed signals, and I guess that's what chop is about. That old adage, it's tough to make money shorting a dull market, has really been true. The VIX is extremely low, so buying protection remains cheap, but actually making money on it has been tough to do. Here's the market from last week. Now, interestingly, notice some strength in financials, broker-dealers, and weakness pretty much across the board in utilities. Home builders showed some benefits, and somewhere is my energy. Energy was mixed. REITs were negative. Some mixed casinos. Wynn had a tough week. If I look at the major markets, here's what I said, more of the same, because it really has been sideways now for quite some time. 1, 2, 3, 4, 5. About 11 days in a row on the Dow and probably on the others of doing nothing. Above the moving averages and basing. Notice how the moving averages start to pull back towards price when we go sideways. That's actually pretty healthy. The VIX popped up early in the week and then came back. So it's off its long time lows, but it's still well below and couldn't rally. And the dollar had dropped this week. Looking at the weeklies, you can see how far we've come in this rally has been pretty significant, and how the VIX on the weekly did have a move last week, but gave up much of that, and the dollar still weak on the lower right. On my Genesis, we have by columns E-minis, NQs, TFs, which are the Russell futures, the NYSE, I believe, and then the Dow futures. And I look at this very quickly to see that we are in buy signals for John's indicators daily, weekly, and monthly. So it's tough to say that this is not a pretty strong market, all things considered. But it has been, as you can see on some of these daily things, really going, well, I won't say purely sideways. It's sideways with a bias to the upside. But compared to this move, it's a pretty flat move. Now, a couple of things. Rates still very low. These were the multi-year lows that we saw a month ago. But the rates have moved up off the bottom, both on the 10-year and the 30-year. As I looked at things this week, I saw some of the regional banks showed up. Some insurers showed up. So maybe there are folks that think that rates are more likely to go up sooner or later. I'm not in that camp. Looking at AD lines, do you expect the market to roll over when you continue to make new highs in AD lines? For the next series of charts, the S&P 500, I believe, will be in yellow, while in white you have the particular indicator we're looking at. So you could see here both price and AD line on the Russell 2000, the smaller stocks, and the 1,000 larger stocks, all near new highs and moving together. The NASDAQ composite, you can see that the NASDAQ composite as a whole is lagging on the AD line, but certainly going up, while the NASDAQ 100 is setting new highs and is pretty much superimposable on the AD line. So a little bit of a divergence there. As this market has gotten more overbought on a longer term, you can see the 200 stocks above the 200-day moving average went up a little bit this week, while stocks above the 40-day moving average moved down some. So we're not at an extreme. This doesn't mean much to me. Stocks at a 3-month new high, new low. Whenever we get to this point up here, which is about 98%, 97%, we back off. And we've done this multiple times. And we are well off a place where I'd be concerned about an extreme. The daily McClellan, the bad news is we've gone higher. We're still tracking lower on the McClellan oscillator and on the summation index as our price goes up. So there are some divergence there. And we've broken below zero on both of them. On the weekly, we've also crushed below zero. And as we make a new weekly high, we're certainly not making a new high on the oscillator or the summation index. So the McClellan perhaps shows a little bit of divergence, which might be concerning. From the buckets perspective, let's look at the 1,500 stocks, the S&P 1,500, looking at how many on the right here are above or below the midline or the Bollinger Bands. And we're a little bit to the positive side, certainly not so much so that we are at an extreme. Over here on the left, you can see that the distribution of stocks within the Bollinger Bands, again, not at any type of an extreme either way. No evidence of a Hindi on the NYSE or the Russell 3000. In green, we have the percentage of the stocks at new highs, but you require to have stocks making new lows as well, and we haven't seen many of those, so no evidence of a Hindenburg. And just for those that might be new, a Hindenburg is not without its controversy, but it's a signal that has occurred with every major drawdown over the last 50 years. We haven't seen one in quite some time. And so if you're a believer that all these pullbacks that we've had over the last several months and several years have been corrections and not a major bear market or pullback, even the ones of August last year. But I'm in the camp that wonders if the reducing number of stocks, the increasing percentage of stocks that are bond funds and tied to interest rates, has that made this no longer a accurate indicator? I don't know. I continue to watch it. When I see it, I will take heed. The lack of one doesn't make me feel like we can't go down. And then if you look at the Woody indicator on the major markets, so that would be this column here. This is good when it's all green. We are in chop land with all yellows and reds, so more reasons to be cautious. Canaries in the coal mine. Last week I talked about how they kind of had a triple top going back to here. Broke out of a wedge, going sideways. I can't say anything bad about them, but stalling kind of fits with the rest of the market. As I said, same story as last week. Know your news and your EPS dates. On the right, you can see there's still a number of stocks that have earnings dates. I should have looked at this before because it'll affect my stock choice of the week. We're clearly getting near the end of this earnings season. As we get into the end of summer, maybe it's time for a little summer rally. And over on the left, the big news releases. We got claims, we got some energy, we got some housing, we got GDP. Do I personally think any of these are going to cause rates to go up before December? No. Although the Feds will spend a lot of time, I think, talking up rates, and that will have impact on the market and on metals and bonds. I think Jackson Hole's coming up, and that will, there might be some commentary that affect rates as well. Market thoughts. This is exactly the same thing as last week. Market rotations in place. Volatility is low. Economy is probably slowing down, which puts the Fed on hold. Bonds and stocks lead while metals, both precious and not, fall despite easing dollar. That was true last week as well. As EPS season wanes, will U.S. election or other news events drive the market? I suspect so. And in yellow, I took off the comments that my gut says we're going higher, but with volatility so cheap, I had bought some protection. I'm not as convinced we're going higher, but I think, we still may. And, this is a neutral assessment at best. Typical agenda. Chart of the week, I put these on just to show you how I find stocks. They don't always work so well. Last week was sort of a flat one. But basically, how I've combined the different things that I do to take a trade. Last week, I liked Bed Bath & Beyond. I liked it because my paint bar up top went to mostly green. We had a mobile breakout from a squeeze. We had a good industry group. We were coming off the bottom with some pocket pivots and kahunas. I'd actually taken this trade on Friday. Here were my stops, targets, buy area, risking $2.59. And, oops, I killed that slide. If you took the trade, you are lost a little bit of money. We came back down about where my arrowhead is. We had some long-tail dojis the last couple of days, and my guess is it's going higher. I'm still in it, nowhere close to the stop, but it certainly hit my buy price and came down immediately. We'll come back to this week's chart of the week in a little bit. Oh, hold on a second. I don't know why those are there. Let's see. This is what I was looking for. All right, my bad. Here is from last week. You could see, well, you can't see. Here is my buy signal here, which corresponds to right about here on my arrowhead, and you could see we actually took out on the first day, ran up a little bit and came back down. My stop is all the way down here. We're nowhere close. I'm still long that position. All right, we'll come back to this in a little while. See, I've been doing all my updating while we've been talking. Let me just clean up my mess a little bit. All right, so let's go into TradeStation. And actually, before I go into TradeStation, last week for me was a very nothing special week. But I wanted to look at this because this is something I do look at it every week to give me a sense of what's working in the market. I start by finding the S&P 500 and seeing, what did the market as a whole do? And I could see here that the market as a whole was flat. It was down 0.18 or less than 0.01%. And then I compare that to the stocks that I owned a week ago, because I don't own all these anymore. And I could see, when I'm this close, it's kind of a meeting the market. And if I take a look at a large list of stocks I looked at that were interesting last week, 62 of them, of which 54% went up on the week, they were also down a little bit, just like the market. Now, one thing I do is I take my big buy watch list and then I actually run it through John's filters, and I call that my filtered buy list. And you could see I found 8. Of course, one of them was Bed Bath & Beyond, which didn't work, but 6 out of 8 were positive, and they were up 1.55%. I like to look at the IBD 50 and see how that compares. Not both with how I did, but more importantly, how the market did. And I see the IBD 50 was up over 1%. And I look at the HGS, which in this case was 54, not 100. That was up 0.74%. So that tells me that growth stocks were in vogue. Here's the weekend review from IBD, and that was up 0.39%. So not a big move on anything, but growth stocks certainly in vogue. And then I break out the stocks that I buy even more. I look at buyable gap ups from Morales and Catcher, 11%. That was a big move. Broken out and running are stocks that have already broken out in the prior week or before, and they're not leaders, meaning they're not lower left, upper right, but they're not in pullback either. They've already broken out of that and are running. Those stocks continue to do well. They were up 3.2%. Pullbacks ready to run. These will be stocks in an uptrend that have pulled back to support and then got a buy signal come in. And so they already got their momentum coming in. They were up 1.52%. My special situation buys, these would be things that have big dividends or some reason why I'm interested in them. They were up 1.3%. If I took all the HCDs that showed up from a weekly perspective, that was a lot of stocks, about 120, and they were up almost 1%. That's one of the things that I fish from. So what wasn't working? The bottom fishing, minus 5% looking at bottom fishers. That's really ugly. We don't want to go that. That's even uglier. Let's go into, use that color. Pullbacks. So stocks that have pulled back that haven't signaled yet were down 0.86. And even the GIF All-Stars that Ron taught us about, finding the stocks that make it through to most of the list in HGSI, they were down 0.37. So kind of a quiet week, certainly on the major indices, but stocks that are already broken up and were running, Bible gap ups, etc., they're the ones that seem to outperform. Now, on this set of charts, I'm going to very quickly look at 5 parameters on each major index. Parameter number 1, and the most important to me, is the John Person indicator for buy, green arrow, or sell. Number 2, the Alexander Elder impulse indicator, which looks at the color of the paint bar. It's okay to be long or hold when it's green. It's okay to be short or hold when it's red. And it's dealer's choice. You can do whatever you want when it's blue. The third thing I'm going to look at are these dots that may be on the top or sometimes on the bottom. And those suggest some MACD divergence is developing. And that, as you can see here, that can go on for quite a long time before it impacts on anything. I look at the relationship between the closing price and the envelope, because I know that although the envelope is often traveled for quite a long time at the envelope, up or down, when you get way below or above the envelope, you're probably going to pull back in. And then fifth, I'm going to look at the high jump, because when it gets about 90, 95, I know that we're getting overbought as well. And I'm going to look at these 5 parameters on daily, weekly, and monthly. So we're going to start real quick. Let's look at the NASDAQ. It's in a person buy daily, weekly, and monthly, blue, blue, and green. So that tells me that it's probably at some risk of pulling back. It's been working off some MACD divergence here. It's within the envelopes, and it's at 94%. So this is consistent with a market that is overbought. My wife will get that in a second. It'll go away, I hope. Perfect. That's the NASDAQ. The Dow, green, 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 so a person buy. Blue, blue, green, kind of similar to the NASDAQ, a little bit of pressure there, but nothing bad. Some MACD divergence, it's within the envelopes, it's at 84%. So, it's kind of still going the right direction and favorable, but looks like it's getting tired. S&P 500. Interesting, has a sell signal on the short term in a blue, buy long in a blue, and a buy monthly. So the S&P showing, at least on John's indicator set, a little bit of weakness. Now, interestingly, on the S&P futures, on the daily here, it did not trigger a sell signal. So there's a little differences between them. So, but that is interesting. And then on the Russell 2000, I'll use the IWM. That'd be fine. It is also a sell signal. So NASDAQ and Dow stronger than Russell and S&P, but notice weekly and monthly still in a buy. So as you can see, the market has weakened some. Kind of goes with my story of CHOP. Very quickly, materials. Buy, 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 green, blue, green, 85%. Materials, I'm going to put as a positive for a sector, XLB. The next one down is energy. Buy, 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 blue, green, green. Energy looks extended, but it looks like it's still a positive. So XLE goes into the positive territory. Financials. Kind of going sideways and is blue, but is on a person buy. So financials, I'm going to put a little bit weaker, but still positive and not minus. Industrials. Green, green, green. Little MACD. Industrials look strong. Technology, weaker. Last week we talked about it had some divergence and with blue. We went to a sell signal on the daily, still weekly and monthly buy signals. So technology goes under the minus category. Staples. It's green bars, so that makes me suspect, but notice it's got a sell signal not just on the daily, but also on the weekly. So Staples looks like they've weakened some. Interesting. Utilities, which have been leading the market with Staples, still in a buy signal, but is on a weekly sell. So I'm going to put utilities in the bad category as well. Healthcare, which have been selling off, still a sell signal daily and weekly. And then lastly, we got discretionary, also in a sell signal. So that's kind of interesting because a few weeks ago these were all positive. So materials, energy, and industrials are the only ones that looked good, and financials looked medium. All right. So now let's go into HGSI, and let's go into all secure. No, let's go into Major Markets Plus, top-down view. And what we see is oil, top of the scale for the week. We'd say energy looked good. Metals look bad. Gold, silver, down at the bottom. Volatility, bonds, utilities, and big stocks. That's interesting. Let's take a look. So the S&P 500 was one of the things that had some weakness. And there's not going to be any kahunas. Let's just get out of this view and look at. So you notice the weekly bongo is still green, so you're still okay to be long. The daily bongo is red, telling me that we've had somewhat of a pullback. And here we are, a very sideways market. Not going to spend much time because it's the same assessment as last week. So S&P has had a big run. It's certainly going sideways here. This is the old high. It certainly would not shock me to see it correct some and pull down to that 50 and retest. But the question is, when? Dow Jones Industrial. Here's its old high. It did retest once, sitting above the moving averages. Weekly bongo is green. Look, these are markets that have had huge runs, took out prior highs, which is hard. Again, that's a bullish thing. They're just going sideways, and again, would not surprise me to see a retest down in this area, maybe to this prior high, and will be interesting to see. NASDAQ. Nope, not that one, although it's kind of related. NASDAQ sitting right at prior high. And Russell 2000, which was the laggard as far as the old highs, still has a long way to go, but it's in a nice uptrend and is minimally off its recent high. So you look at the indexes, the worst thing you could say is that you're going sideways and getting tired. The best thing you could say is you've got a perfect lineup of the 8-day above the 17, above the 15, above the 200-day moving average, which is consistent with an uptrend. The Bongo Weekly is green, consistent with an uptrend, all of which have had a big run, all of which are probably at some point going to come back and test, all of which are in a position that I can't tell you they can't go up either. So I think the market is sort of in chop and going sideways, but you could see a summer rally into Labor Day. That wouldn't surprise me. U.S. dollar sitting down at its recent lows. You would have expected that. Notice the Bongo Weekly has now gone red. So that might be bothersome if you are a U.S. dollar bull. A weak dollar should be good for certain things, including the market. Well, would have expected it to be good for gold. And gold, gold's much higher than it used to be. It's doubled since the beginning of this year, at least the GDX has, and pulled back some out of curiosity. GLD kind of going sideways. So gold, considering the weakness in the dollar, we didn't see a big move in gold. Silver pulled back to the 50. So again, a little bit disappointing per se that you didn't see any kind of a move in the metals despite a weak dollar. Let's take a look at the VIX. And the VIX, even though it did have a little move on the week, the VIX remains near its low. As these boxes are to depict, you want to be looking to get out of the markets when they start to move up or be short. And when the VIX comes down, that's when you want to go long, because that's when you're going to make money to the long side. We are in the land of the flat VIX, and I think this red line represented the all-time low, at least from the measurements that I have. And then one thing that did benefit from the dollar perhaps was oil. Now again, maybe hard to get excited about this chart, certainly not. But oil has broke above its major trend lines. Now, the bad news is oil is at a place, if you're an oil bug, where it's been failing. The good news is there's more talk about the OPEC and other users getting together to limit rates, and notice that it actually went to a weekly Bongo red. Out of just curiosity, I'm going to bring this out and look. I went into a weekly Bongo green, I'm sorry. So this is when it went red. This is where it stopped red. You would have captured almost the whole downside. You got a little bit of an upside here. Down, little blip rally, another leg down. Tell you, the Bongo is pretty, and then an uptrend, little hiccup down. The Bongo has been extremely good at capturing the oil moves, and the Bongo has gone to a buy, the weekly Bongo. All right, so where am I sitting? I'm sitting back where I started. I think this is a market in indecision, also known as chop. I think there's a reasonable chance that this market's going to pop and go higher, especially with the holiday week coming up, holiday weekend. But I'm also a believer that at some point this U.S. election is going to bring this market down. Now, the funny thing is, I remember sitting, I think I mentioned this last week or the week before, sitting in a hotel room in Pittsburgh, Pennsylvania, getting ready for a meeting the day that Obama got inaugurated and watching the market go down 400 or 500 points. Who would have thought that that was the end of the bad or the beginning of the end of the bad, and that before the Obama left market, we'd be back at all-time highs. So the Democrats are good for the market historically, and I think it's likely we'll get a Democratic president. I'm not going to play politics except to say it's going to be an interesting last part of the year. Now, the next thing I'd like to look at is industry groups. So if I go to 07, there's 171. How many of them are upward momentum? I only got 43 over 2 days. Over 5 days, I got 52. Downward momentum over 2 days, I've got 36. And over 5 days, I've got 38. Chop. This is not an overwhelming move to the upside or the downside. Let's look at leading groups, semiconductors. So I usually look at the top couple of these. I'll look at a couple of these, then look at some of my stock picks, show you my chart of the week, and then watch the end of the game. Change index group. You know, it's just so hard for me to buy AMD, but boy, I wish I would have. AMD is clearly a leader. Earnings already out. Next earnings are in October. This has just been a great move this year. Popped again this week. You know, it's had a long run. Earnings are negative. Its revenue has stayed pretty consistent, now moving back up. There is demand on this, a couple of kahunas. Based upon what I've learned from Ian, the stock's going to go higher. Micron once was a big leader. Look at the industry group strength, which also affects AMD. Had a gap up with a pocket pivot on Friday, pocket pivot on Wednesday. Looks like this one wants to go higher as well. Cavium moved up to the pulled up to the 200-day moving average on a big power move. OBV looks good. Lots of pocket pivots. Everything is green. If it can break above the 200 and hold, that might be something interesting to see. Marvell Group, another one that looks like it wants to run up. Kahuna pocket pivot coming out of a squeeze. Great earnings per share growth coming up. So certainly there's a bunch of nice looking stocks here. The one that I'm currently holding is this one, AVGO. Its earnings are coming out, and I'll have to decide whether I keep this into earnings or not. It's had a huge run. Sold off a little bit on earnings here. Didn't do much on earnings there. Didn't do much, sold off on earnings there. Sold off on earnings there. Anybody want to guess what I might be doing at earnings? Yeah, I'm either sell call at the money or I'm going to probably sell my stock. All right. Of course, that means it's going up. Exploration and production, no surprise with oil being hot. We'll take a look at some of these. Stone Energy, this thing's been destroyed. I'm probably, look at that, a couple kahunas in a row popped up. Everything's green there coming out of a squeeze. I hate those numbers. Be enough for me to pass. Marathon I own, and I probably wish I had more. Marathon looks like it's going higher. Look at the group strength. Certainly this is one of these would be a broken out and running. By my definition, everything looks green. Chesapeake, not as pronounced, but similar. This is another one. What do I mean by broken out and running? Stock is sideways. This is when it broke out, it retested, and it went. So down here, this would be a pullback. And ready to run because of the pocket pivots and kahunas. Now if I picked it by my terminology, which doesn't mean anything except it's what I use, it's broken out and it's running, which is a group that has been behaving well. Look at the earnings per share growth. This is a turnaround in the oil patch and gas. Boy, I wish I would have bought some when it was $100 a share. What a great looking chart. And kind of the same chart, but at $10, doesn't have the same earnings per share growth. I own several of these. Resolute's one that has just had a huge move. I'm not sure I'd be touching it here. But then again, it's $18 stock. It's got 70 cents coming in next quarter after losing money for quite some time. Great earnings per share growth rate. Screw it. I'm buying this one. I like this. I'm adding it to. Now, I'm kidding, okay? But I'm a little bit more intrigued when I look at the fundamentals here. It's had a huge move from $4 to 18 in 2 months. But if it's actually making money, and if that making money is on production, I got to pay more attention to it. So I'm going to take a look at this one a little closer on the fundamentals, and huge amount of demand coming in. So I might want to be playing here, especially if prices hold up. Semiconductor manufacturing, talk about old names. Applied Materials, a viable gap up, great fundamentals with earnings per share growth increasing, pays a small dividend. Kahuna, read Morales and Catcher's books, you know how to play with viable gap ups. I like it. Sun Edison. All right, something happened here. Oh, Sun is now Semi. It used to be Sunni. I don't know what happened here. There must have been some of a corporate event because you all know Sun Edison has been one of the big losers. And it used to be SUNE, I thought. So maybe, who knows. On a weekly, doesn't look so bad, does it? Deep pullback, right side of the cup. Look at the group strength on the daily. Something happened with the Bible gap up early in the week. I'd have to figure out what's going on here before I would touch this. Lamb Research, trying to break out here. I like the first one much more than I like the others. MKSI, I don't know what happened back here. But we're sitting here, pocket pivot, Kahuna, mobile breakout from a squeeze, everything went green. Great earnings per share growth, plays a small dividend. I'd like to understand this date. It doesn't look like it was earnings, but something looks interesting here if you want to play in this sector. Number 4 is specialty apparel. Shoes had a big boost this week. Foot Locker had great earnings, Bible gap up, couple of kahunas coming out of a squeeze. Now, interesting thing is, look at Friday. Pocket pivots, kahunas, mobile breakout from a squeeze, up to the 200-day moving average. You could have bought this thing on Thursday, the day before earnings came out. Somebody knew what was going on. Gap, been in a horrible downtrend for quite some time. Fall into the gap. This thing fell into a deep hole. Here's on the weekly. Maybe the gap is back. I'll have to ask my wife. Cup handle breakout above the moving averages. The gap looks kind of interesting. Ross Stores had earnings, Bible gap up. On this list, I'm interested in Buckle. I have to figure out where the earnings are. Earnings are out, I believe. I'll have to verify that. Had a nice move on Friday. Pocket pivot, Kahuna, OBV moving up. And then one that I've loved for a long time, Burlington, also looks great, but earnings are coming out this week, and I think we have to be aware of that. Computer hardware and storage. NetApp, this is an old name. It's got to be a cloud play. Look at the earnings per share growth coming in. Bible gap up, probably too far run. EMC, I'm looking for anything that looks interesting. Nothing else looks interesting. Broadcade, yeah. Infrastructure software. So some of the antivirus things are starting to move. Symantec really has had a huge move, broken out, pull back, and running, pocket pivots. FireEye had some news about the Clinton Foundation, I think, chose them. VMware, that's kind of a nice base up here. Pocket pivot, Kahuna, everything is green. Looks like it wants to break out. The big daddy here of the stock is probably Palo Alto. Languishing here below the 200-day moving average, but it has moved up off the low, 120 up to 138. And then I own CyberArk, which right below the PSAR dot has had a bit of a pullback. We'll see if CyberArk can participate. Apparel footwear, Nike and Under Armour went up with Foot Locker, Pocket Pivot, Kahuna, everything is green. This is Nike. In a downtrend, still below 200-day. Hanes brand looks the same. Under Armour looks even better. It's really struggled to do much over the past year, but it did have a nice move off of a 35 bottom back up to 43 after missing on its earnings. This is top-down investing. This is how you take your 8,000 instruments and you get to something that's manageable. Internet-based services, Shopify. The fundamentals don't look so hot. The chart looks pretty darn good. Broke out and running, couple of pocket pivots. Match Group pulled back, broke above the 50 on a pocket pivot in Kahuna this on Friday. Then Grubhub's been another one, pull back with a pocket pivot. Banks, part of why you wonder if something's not going to happen with interest rates or it's not going to be talked up. Here's Bank of Colombia, so you've got some foreign risk as well, but certainly a nice base. Breakout with a pocket pivot. Everything is green, pays a 3% dividend. If you want to play regional banks, KRE is a ETF. It's gone sideways. I thought it paid a dividend of 3%. You have to look into it. It's certainly going sideways. And then number 10, basic and diversified chemicals, LYB, in a downtrend, but had a nice move at the end of the week. Bongo turned green on the weekly, so maybe it's about to change its stripes. Praxair has been in a weekly Bongo green, breaking out here, had a Bible gap up, pull back, take out the high of that, might be interesting. Olin showed up on my screen with the Kahuna, but it really sold off hard here. It's in a weekly Bongo sell. So that's just some of the 10 groups. Let me just put this onto a scorecard and take a look at the stocks that made my buy list this week. You know what? Those are last week's. Ha! Sorry about that. I don't think I updated it yet. So I already have it on this computer. So let me go import user group. And let's go to Dropbox is a great tool. I just throw them in here and I bring them over. Hit cancel. And so these are the stocks that made my interest this week. Now, I break these into the classification. Broken out and running, these are the ones that had big moves last week. So this were this week's picks that looked like broken out and running. So again, it broke out, hell, back here. It broke out in this range. It's run. It's no longer basin. Urban Outfitters had a nice little run. Micro Semi broke out, had a nice little run, gone sideways, looks like it wants to go again. DeVry, same thing. Broke out here, sideways, looked like it wants to go again. Gap, broke out, sideways, looks like it wants to go again. This one is interesting. Laredo Petroleum, run up, sideways, cup, handle, breakout. It's broken out. I think it's still running. Look at the earnings per share growth. Genesee, Wyoming, a train, sideways, broken out, and it's not the breakout day. It's broken out and running. And Ambarella broke out, tested, and running. Greenbrier, broken out, sideways. Now it's running again. Notice everything's green up here coming out of a squeeze. SM Energy, broke out, pull back, broke out here, and now running. Northwest Bank Shares, kind of a sideways. It looks like it's breaking out and running there. MSG Networks broke out over here and is still running. So these were some of the ones that were broken out running. So what I basically do As I go through my list, I put them into different categories, and then I monitor them during the week. I'll leave it here for a second, see if there's anything else I'd like to show you that I haven't shown you already. So these are the ones that I'm going to be following. Now what I want to do is show you a couple things. From a seasonality perspective, there are a number of stocks that over the next month do really well. Airplanes, United, out of the last 10 years, it's been up 10 years in a row, an average of 14%. American Airlines, 8 out of 10, 14%. Delta, 8 out of a 9, 11%. Caldus Software, up 12 out of 12 years, 9%. John Beam Technology, 8 out of 8, 8%. I like finding stocks that look like this, that have a combination of a big move and most years are up. So let's take a look at this Caldus Software, C-A-L-D. It actually made my screen anyway. So here's a stock. I should have taken this as my buy of the week. Shame on me. Here's a stock that has broke out here, pulled back, was running, pulled back here, pocket pivots, mostly green up here. Doesn't have much in the way of earnings per share growth, which would be a negative. All right. But let's go into, just for shits and fits and grins, let's go into Seasonality Trader, C-A-L-D, and see what it looks like for seasonality. So, very interesting. It suggests that if you buy it on August 30th and hold it to August 13th, you're up 9 out of 10 years, a return of 14.7%. That's not too bad. The yellow denotes 10-year seasonality, the average performance over this period of time in 10 years, the green in 5. I could look at year after year. I could look at 2015. It moved up some in white. You could watch the white. Moved up 2013. Here's 2014, 2013. 2012 was kind of flat. 2011 was flat. But the average performance over 5 and 10 years is very positive. So the next thing I would have wanted to do, had I thought about this before, is I would have probably gone into my TradeStation screener and I'm going to go through this and then I'm going to finish. So I'm going to just add CALD here. What do I see? I see a stock that's in a PPS weekly sell signal. OBV has moved up here. The bongos on daily, hold on, let me make this bigger. Daily and weekly and monthly bongos are positive. It's in a PPS daily buy. So what I don't like is in a weekly sell, but I'm thinking that this is getting ready to move. So all I do is I take CALD and I take all my other buy stocks and I put them into my big radar screen. And I've already got this in here, I suspect. And then I'll be watching it during the week, and I'm going to look for perhaps a flashing green light here, which will tell me that the weekly PPS has gone to a buy, and I might go into this because I like its seasonality. So I watch this during the week. I have my own monitor, high def monitor, which is much more than this, and I can get pretty much this entire screen and most of my stocks on a single monitor. Very quickly, let's go back to my screener, and these were the ones that made it to my buy watch list for this week. That's my sell list. All right, Buckle. Here's a retail apparel store. High close doji. OBV heading up. OBV heading up. PPS buy. PPS buy. This was very close to being my pick. It had run a little bit. It's already getting some divergence from this run. I like Buckle. Chesapeake, we looked at this. I think this was the second or third of the oil and gas stocks. High close doji in a PPS buy. PPS daily buy. OBV is up on both. I didn't go with this because it had already run too much. Diamond Rock Hospitality. OBV looks strong. HCD, I'm not sure it counts because it's not really in a downtrend, although it had a couple days down. And a PPS buy, that one looks good. I did not like the OBV on the longer time frame. Express Inc., I guess another retailer, looks good with the high close doji. It's already run some. I was a little disappointed in the weekly volume, but it's close on the OBV. We talked about the gap. I certainly could have picked this, high close doji, but it doesn't count because it's already had a run. PPS buy, weekly and daily. I didn't pick this. I thought it already run too much, but this is a stock that can run higher. I'm going to come back to guess in a second. KOS, an energy play, high close doji, super strong volume in PPS daily and weekly. This was a finalist. MKSI, this is one that had that day I didn't understand not long ago. You can see it right here. Clearly in a nice uptrend, in a base, had a high close doji on Friday. These dots are from my indicators. Daily, weekly, and monthly bondos are positive. It had a pocket pivot, a mobile breakout, in a squeeze, a PSER reversal, and a kahuna. So this one looks extremely strong. I just got to do my research on this date. Restoration Hardware, another finalist. Deep pullback, PPS buy, daily and weekly. OBV starting to look good. This certainly could have been my choice. And then oil, I didn't take it because it's already had a run. It's probably getting closer to the end of its run. But it had a PPS weekly. It's in a PPS daily. Thought that one looked interesting as well. Let me finish with what I did pick from my chart of the week for this week, and then we're going to say good night. So, charts of the week are for education purposes only. Trading, especially options, carry substantial risk of loss. I don't warrant any expectation of return. I may or may not have already taken a position in the stocks I present. I will take the trades even with a small position size so I have skin in the game so I can discuss on the following session if they trigger. I do this not to provide stock tips, but rather to openly discuss how I take a trade, how I pick the stocks and strategies, and where I would take profits and place my stops. I decided to go after one of the retail plays, and I didn't realize it then. Probably have to be careful and take this off, but let me talk about it anyways because earnings are coming out. I chose it. Notice my Bongo Weekly went green this week. Everything else looks green. Coming out of mobile breakout from a squeeze. Industry group is incredibly strong. I've got a double bottom here. I moved up above the 50, so that trend is good. OBV turned up. I had a kahuna. Lot to like here, and as you'll see, I can get away with a relatively modest stop as well. My trading plan is, well, if I look at the person signals, big pullback, PPS weekly a week ago, PPS daily on Friday. Daily and weekly bongos are green. OBV is heading up on both, although not very impressive on the weekly. Trading plan, I'm going to go long at $15.95, which would be a multi-week high. My stop will be $14.80, so I'm going to risk $1.15 per share. I did this totally wrong. I'm going to stop this and fix it. Hold on a second. All right, so the only thing that was wrong here is a number. I'm risking $1.15 a share, which is 7.2%. Assuming a risk of $2,000 per trade, I'm going to buy 1,300 shares if I get my trigger. So the risk here is that the market trades down. Since my stop is above the high of the last several weeks, it's hard for me to believe I'm going to get filled if the market sells off a lot in the pre-market. My stop is within 8%. That's very comfortable. I'm always willing to risk. I have a one-to-one target, something that I was doing and then reinforced because John Person does it. And the way I trade this, if I break out, and look at, this is my stop on the weekly. This is a small move. Why would I want to take my whole position off here if I break up here? I don't. I'll take off half and I'll move my stop to break even. And then I'll let the rest of my position run. That's my plan. And let's see if I can get this thing filled. Always interested in having more people join my PUG group. It requires ownership of HGSI. And then John's lifetime indicators. I guess if you have the lifetime indicators, you don't need HGSI, but you'll miss out on half the fun if you don't use that as well. Again, the September 24th through 26th, John's great meeting, and mine on the 23rd. Contact me at hgsidoc@gmail.com for more information, and hope to see you in Florida. And thank you, and have a good night.